Hey friends, my dividend income, it is now up 7.64% basically overnight. My dividend income has hit a new record, and that's because I placed some large trades. Basically, over the course of 2 trading days, I put a lot of money into a stock, a particular stock that has now become the number 6 largest position in my portfolio. In the video today, I'm actually going to share the top 7 positions in my portfolio because a lot of you will be surprised. I'm going back to my roots. The number 4 largest position in my portfolio is none other than Altria, ticker MO, because I made a large trade in that stock last December, and it's paid off really well because the stock has appreciated in share price and it's paying out massive cash flow. And so the number 6 largest position in my portfolio now is none other than British American, ticker BTI. And so I've got those SIN stocks in my top 6, in my top 7 quite heavily. I'm going to review my portfolio a bit in the video today and how the composition of the portfolio is changing just a bit to skew towards more high yield. But I have a number of points, a number of slides that I want to go through today. So let's get started. As you can see on the screen in front of you right now, I just want to share that British American, I made some large purchases. It's now my number 6 largest position. In my last portfolio update, I'll link in the pinned comment below. My patrons already know this, but in my last major Patreon portfolio update, which is from May 20th of 2024, BTI was actually my number 16 largest position. Now it's number 6 because not only did I make some large trades in BTI on the 18th and 19th of July of this month, but also I had made some other smaller trades in BTI leading up to it. It's been an area of focus for me. I see value there. I've actually shared this on YouTube. I'll link in the pinned comment below to some of my recent stock analysis on BTI. I don't want to get into too much analysis today because I've already done it. I have a thesis that BTI is undervalued, and I have a thesis that the stock will do just fine over the long run. I don't think their business will erode quite as quickly as many are thinking. And so I have a whole thesis on that I'll share in the pinned comment below. But let's go back to the slide, check it out on the screen right now. And so from my recent trades that I made, my dividend income is up a staggering 7.64%. I have a new all-time high dividend income, projected annual dividend income going forward. So what are the precise trades that I made? Well, I bought BTI, but I also paired it with SCHD. I've shared this as well recently. I don't want to rehash it too much because you can check out the pinned comment below. I will link to this helpful resource. But these days when I'm making trades in my portfolio, typically I like to pair them. I like to add high yield, but I also like to add dividend growth. BTI obviously offers some really enormously high yield. I'm going to share some statistics on the stock in a minute. But SCHD, which I paired it with, offers phenomenal dividend growth. This time, because my needs right now are for cash flow, I really skewed it towards BTI. So check it out on the screen right now. As you can see on the second slide today, I want to share with all of you just how I did this trade, how I thought about this trade. What I ended up doing was on July 18th, I bought BTI at 33.27 at 1/4 weight. On the 19th, I bought more BTI at 33.21, and I did 1/2 weight. When I say weight, this is as a percentage of the overall funds that I had available to deploy. Also on the 19th, I went ahead and I put 1/4 weight of the funds I had to deploy in SCHD. I bought at 81.03. The aggregate dividend yield on average of these trades, when I sum them all up by weight, is 7.56%. So I added 7.56% when I look at all 3 trades as one. Obviously, BTI is yielding higher than that, SCHD lower. My dividend income overall, as I already mentioned, is up approximately 7.64%. These trades, honestly, were quite complex. I'll link in the pinned comment below to my Patreon. My patrons already know this, but I was agonizing about it. If you've been following my channel here on YouTube for a while, you know I identified Altria last December as a value, and it seemed like that has aged well. Not all of my trades always age well. I get comments sometimes, hey Ian, this didn't age well. That's okay. I'm a real person trading real money investing, real money for dividends that I use to pay bills right now that eventually I will completely live off of. And I share it all, my complete journey, the successes, the setbacks, all of it. And so sometimes my stock purchases may not age well. We'll see. I made a big kind of line in the sand here. I am putting it out there. These trades in BTI, they may not age well. I may not be so fortunate as I was with Altria last December. Perhaps this is a local high point in BTI and I will regret these trades. Time will tell, but I'm just putting it out there because I want to share my journey here on YouTube and document what I am living through, the real challenges as a dividend investor. But anyway, what I've been sharing with my patrons is, and they already know because they see my trades, I share the trades that I make over there. And what I've been doing is averaging into BTI slowly but surely over the last few months. And slowly but surely, it's been increasing in share price. I started maybe around $31, then it got into the 32s, then the 33s, and now as of today, July 25th, it actually hit in the 34s. They had an earnings announcement. It was received well by the street. The stock went up like almost 5% in one day. It's kind of like chasing a freight train that's starting to accelerate a bit. And what I shared with my patrons is this was agonizing because I wanted to get these trades done before it appreciates in price. But also I had the real world kind of situation that I was trying to wait for cash flow to come in, funds to deploy. I was waiting for it. And I was hoping that, hey, Ian, by the time you actually have your money to invest, it wouldn't have gone up too much. Because I saw the value months ago. I would have liked to put even more capital months ago. But the realities of being a real world dividend investor is capital to deploy does not always match up with value, especially when you're someone like me who is usually kind of fully deployed. I don't have too many funds sitting around. So when I see value, I'm always kind of hoping and wishing that it stays there long enough until I have a good sizable amount of funds to actually buy it. Thankfully, I believe it worked out here, but it was agonizing kind of until the last minute. I was really sweating it out because I was seeing the stock appreciate each day. And that's actually why I made the trades in BTI over the course of 2 days, because I was kind of hedging my bets. I was even borrowing money from an emergency fund to buy it, not knowing what would happen the next day. It's kind of like, could it go up so much more? When you look at the trades, the 18th and 19th, it didn't really go up too much more. But nonetheless, that was a concern of mine, and that's why I did the trades this way. And honestly, originally, I was going to go 100%. Take these funds I had to deploy 100% into BTI. The reason I did 75% BTI, 25% SCHD, is for the real world reality that by the time I had my cash to deploy, it had gone up a lot. And so I felt like balancing it out with SCHD, one, it ties into my personal goals, but two, it kind of hedges my trade a little bit there because I didn't like how BTI had gone up so much. Nonetheless, I'm glad I made it through this, and by the time 6 more months has elapsed, we get into December of this year, I look back, hopefully this will age well like my Altria investment, but maybe not. We'll see. I'm sharing it here. So anyway, check out the next slide. I have some more I want to share with all of you today. And so let's talk about goals really quickly. As long as I'm kind of on the topic of BTI and SCHD, why else do I pair these trades? I'm going to link in the pinned comment below because I've already done a video on this topic, but primarily right now, I'm in my 40s. And the years are going by really fast. And inflation is real. My primary goal at this point is to have a higher aggregate portfolio yield because I use dividends partially to pay bills now. I'm trying to reinvest as many of them as I can because I know it only gets me to my end goal, complete FIRE, financial independence, retire early, quicker. And my goal at this point is to have enough cash flow to pay all the bills by the time I'm 50. And so that's my primary goal. But my secondary goal is to increase aggregate portfolio dividend compound annual growth rate because I know yield on cost is real. I know that I have a lot of benefits over the years by achieving yield on cost, and I still have a lot of years ahead. And so having something like SCHD helps me reach that secondary goal. That's why I blend it, where the primary goal is higher yield. That's why I went the 75% weight on BTI. But that's where I'm at right now. I have 2 goals in the portfolio, and it's higher yield, but also higher dividend growth rate, because I know the growth rate supports aggregate portfolio cash flow over time. Done a lot of videos on this over the years. By the way, if you're enjoying the video so far, it would mean the world to me if you considered subscribing to my channel here on YouTube. I work very hard to produce these videos. I'm very busy with a work schedule. I love this community, and I always try to carve out extra time, even if I'm staying up late at night, to produce the videos. So your subscriptions, they mean the world to me. Now, without further ado, let's share the top 7 stocks in my portfolio. And my corner patrons, by the way, see the percentage allocation to all the stocks. But my last corner Patreon update was in May. I'm going to publish the new one pretty soon. It's mostly done, but I got through just enough of it to share with all of you what I'm going to share now. So check it out on the screen. And so some stuff has changed here. It's interesting to see that Johnson & Johnson, PepsiCo, and Starbucks, those are kind of my core 3. McDonald's, it used to be core 4, but it got outdone by Altria there. But anyway, it's interesting, those top 3, J&J, Pepsi, and Starbucks, they're always kind of fluctuating in size. At one point, Starbucks was number 1. At one point, recently, Pepsi was number 1. Well, now J&J is number 1 by value. And so they're always kind of going all over the place. Honestly, out of this list, I get people writing in. I had someone on Instagram ask me today. By the way, I'll link in the pinned comment, but check me out on Instagram Connect. I do try to respond to DMs over there. That's the best place to try to engage with me via DMs, is on Instagram. I'm over there. But anyway, out of this entire list I'm sharing right now, on a go-forward basis, what would I like to buy out of this right now, given current valuations? Probably add a little more Starbucks. But I'm always adding to them. Anyway, J&J, it's 8.5% of the value of my portfolio. PepsiCo, 7.8. Starbucks, 7.4. Altria, surprisingly, is all the way up now at 7.1. McDonald's, 6.3. BTI, the topic of the video today, 5.1. And RTX, Raytheon Technologies, I guess now they just go by RTX, they had a really great earnings report today, so it went up quite a bit, but that's 4.9% of the portfolio. Overall, I own 37 positions, but my top 7 make up 47.1% of the entire portfolio. Now, what's interesting is some of you may be looking at this and you're like, wow, Ian, your J&J, Pepsi, and Starbucks, those percentages are down. Well, the reason the percentages are down, or the percentages are down on everything other than Altria and BTI, because I put a lot of capital into those. And so that's why the portfolio overall is bigger in value. J&J, Pepsi, Starbucks still have the same amount of capital in them. I haven't taken anything out, but the percentages go down because I've allocated elsewhere, infused capital into MO and BTI. Top 7 represent 53.14% of dividend income. And so obviously, when I look at this, I'm heavily weighted on SIN stocks right now. And my goal, I've already shared this in that Altria video, and I'll link to that in the pinned comment, but same with BTI. At this point, I'm done. I'm done with SIN stocks. They represent a large percentage of the portfolio. I'm going to share that in a minute. But my goal at this point is just to take capital out of them. The dividends as they're paid, I'm collecting those. I'm either going to use them to pay bills or selectively reinvest. I actually own Altria and BTI across 2 different accounts, and the reason I do that is one account I try to selectively reinvest. The other one I'm just pulling dividends and using them to help pay bills, because I'm enjoying some of the fruits of my labor. I'm enjoying some of that semi-FIRE, financial independence, retire early, if you will, right now. And one of the main ways I'm enjoying it is I'm using dividends to help pay bills, especially travel-related expenses, family travel. Anyway, I need to de-risk the portfolio. The way I de-risk it is I just let time do its thing. I let the dividends come through on BTI and MO. I don't reinvest them into the companies that paid them. I either spend them, save them, or selectively reinvest them elsewhere, or a combination thereof. At some point, these positions will be completely de-risked because I will have gotten all of the capital invested back through the form of dividends. At least that's my thesis at this point. Check it out on the screen, though, right now. I want to share a few quick stats on these SIN stocks. SIN stocks, and there's other ones not in this top 7. I include those too. That's why the numbers are a little different, because I have other SIN stock positions, which I don't even want to go into today. But they represent 31 0.62% of my dividends. So I have a lot of weight in terms of dividends on these stocks. In terms of portfolio value, though, they only comprise 16.4% of portfolio value. That just goes to show how much impact a high yield has, because they're very small relatively in value as compared to the dividends that they send my way. And so that's where I'm at with that. But I have more slides. Let's keep going, as you can see on the screen in front of you right now. So I want to talk about my aggregate portfolio yield really quickly. And so some of you may remember, I'm going to link to it in the pinned comment below. And I have a lot of links in the pinned comment below, but in my last portfolio update from May, my portfolio yield was at 3.73. Now I looked at it just today. Why is my portfolio yield only at 3.79% aggregate when I added all of this BTI that is yielding so much? Well, the reason is dividend stocks recently have been rallying, and as the portfolio grows in value quickly, it can push down current yields. And so it's just a reflection of stocks rallying. But like I said earlier, my dividend income has skyrocketed overnight. And it seems like the portfolio value is too, because just by referencing this number, the aggregate yield should have grown more, but for the fact that stock values are going up. So what is my top priority going forward? I shared with you what I did. I'm putting it out there. It'll be interesting to see if this ages well or not. I hope it does age well, but it'll be interesting. But what is my strategy going forward? I want to share that with you really quick. So check it out on the screen in front of you right now. So many of you know that I have been a bit obsessed with SCHD. This is an ETF from Charles Schwab. It has performed very well over long periods of time as compared to the S&P 500, but it skews towards dividend growers. And I've done a lot of videos on this. Boy, even more links in my pinned comment, but I'll include a few of them below. From my last portfolio update, SCHD was only 0.4% of the portfolio. But as of today, it's 1.5% of the portfolio. That's actually a big deal for me. It's a big milestone, because 1.5% of the portfolio, I'm pretty happy with that. I'm moving in the right direction, and it shows that my recent trade, but also the just weekly kind of smaller trades, they've been adding up. My goal, however, is to make it 5 to 7% of the portfolio. And to do that, I also want to kind of balance it with higher yield. I don't think I'm going to be doing any trades like I did with BTI and SCHD, where I have 75% in higher yield, 25% in SCHD. Going forward, what I might do is more like a 90% or 80% SCHD, and then a 10 or 20% higher yielder. And that higher yielder probably won't be BTI. It'll probably be something from a different industry, because I have to diversify. And so my goal when I'm deploying capital in general, I don't want to be too much below 4.5% blended yield when I'm making any trades. And so I've shared this a bunch of times, but I just want to kind of round out the video today with a little bit of optimism, because I'm encouraged by what I experienced with Altria. I think I could experience it with BTI again, but I don't know. Only time will tell. But check it out on the screen. This is a quick overview of my Altria trade from last December. I bought my last large tranche at $40.19. Well, it's now at $49.80. And so I'm up 23.9% in capital appreciation just since December of last year. But I locked in a dividend yield on cost of 9.75%. I believe BTI will continue to unlock value like MO has, and may continue to, but it's already trending up really quickly. So with that, I want to just point out as I close out the video today, what did my trades look like in BTI? Check it out on the screen right now. Some of you have seen these statistics before, but you can see here, I bought two trades, two tranches, 718 and 719. When I blend those, my blended price that I achieved was 33.23. And so the 52-week high, which was probably realized today, was 35.03. So I did get a discount of 6.7% from the 52-week high. That's nice. Based on earnings estimates, the forward PE is a 7.19 this year and a 6.85 next year. Those earnings estimates, by the way, have gone up. I think they gone up because the earnings were released today and they were better than expected. But the company is saying they see low single-digit growth ahead. Based on the dividend per quarter, I get $297 a year in dividends and a dividend yield of 8.94%. So I locked in almost a 9% yield on these trades. But when I bought Altria in December, it was 9.75. The reason BTI is a little lower, though, is the payout ratio is lower than Altria's at only 64%. There's room to increase the dividend, but history tells us they're only increasing at about 2.63% per year. They're being more conservative with dividend growth. Market cap 76.95 billion. 5-year trend, as you can see on the chart, not looking so good, but it's starting to increase again. I'm not buying this for capital appreciation. I'm buying this for the yield. But I don't believe in losing capital appreciation or facing capital loss. And so I'm trying to buy yield at a good value where I could possibly lock in some capital appreciation, a little bit at least, over long periods of time like I did with Altria. I honestly don't think Altria, or I don't expect it to go up too much more, but I'm happy with the gain I have. I locked in 23.9% capital appreciation on Altria. If it never goes up again and I can just get my 9.75% dividend per year, I'm fine with that in Altria. I'm hoping for the same with BTI. I kind of get maybe a 10 or 20% in capital appreciation, and that's good. That's good enough for me forever. And then just kind of lock in that 9% yield. That's how I'm looking at these stocks. All right, everyone. I hope you enjoyed the video today. I would love to see you in the comments below. Share your thoughts on my recent trades. Share your thoughts on my top 7 positions in my portfolio. If you enjoyed the video today, please go ahead and click the like button as well. That means the world to me, and it helps me know which videos you guys like the most and which ones you want to see more of or less of. And so the likes mean the world to me. It always helps me out. Before I go, in terms of a full disclosure, I am long the stocks mentioned today. I own Altria, ticker MO. I am long BTI, British American, ticker BTI. I'm long the Charles Schwab SCHD ETF as well. Also, I've got to reference my notes here. I am long Johnson & Johnson, ticker J&J, PepsiCo, ticker PEP, Starbucks, ticker SBUX. I'm also long McDonald's, MCD. I'm also long Raytheon Technologies, or they're now just calling it RTX, ticker RTX. I own those positions in my personal stock portfolio, dividend stock portfolio. Before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. I'm just sharing my journey as I go, and it's not advice. And also, as always, in the description below, I share disclosures, disclaimers as well. So check those out. I love you all. Thank you for watching the video today, and I will see you all in the next dividend stock investing video.